Hello and welcome back to goldstocktrades.com. Today we have with us Ken Cunningham. Ken is CEO of Miranda Gold. Miranda can be traded as MAD on the venture, and it also can be traded as MRDDF on the OTC. Thanks, Ken, for being with us today.
Hey, great, Jeb. Good to talk to you again, and certainly looking forward to addressing your listeners.
Ken, we're in a very tough market for the juniors. What makes Miranda stand out from the crowd in this market environment?
Yeah, Jeb, you're absolutely right. I just got back from a conference in Southern California, and I was also in January a conference, investment conference in Vancouver, and it's very, very clear that the junior sector as a whole is having difficulties this year. Fortunately, I was, lucky enough or astute enough to expect that we were going to be seeing something like this. So Miranda was able to cash up our treasury late last year. We took our treasury to where it sits now, which is over $8 million in cash. We had some great support from people like Rick Rule with Sprott Global and whatnot, and so we've really protected ourselves against the type of market that I think is going to cause a lot of juniors to go away. We're hearing anything from 20 to 40% of the junior resource companies are going to run out of cash this year. Of course, Miranda has always had a business model that works in this kind of environment, and that is the prospect generator joint venture business model. So because we're always generating projects but then finding joint venture partners to do the expensive early stage exploration drilling, we've always had a model that protects our treasury. And of course, with a cashed up treasury and this type of market, we're really set to take advantage of the situations. We're doing a survey right now, the two jurisdictions that we work in, Nevada and Colombia, and we're making a list of companies that we think potentially might run out of cash this year, and then we're juxtaposing that with their assets to see if we might be able to leverage our treasury and pick up some key assets as we go forward.
Ken, can you talk to us about the Miranda technical team that in this market environment could see what sort of assets might have potential value?
Sure. We've got, really strong group of exploration geologists. In fact, every employee of the company is a geologist. We've got 5 permanent staff in our Elko, Nevada exploration office, and we've got 3 Colombians in our Medellin office. In particular, the Nevada group, we've been involved in over 60 million ounces of discoveries in Nevada during our careers. And of course, Joe Aber, our vice president, is responsible for a large number of those, and he's the guy that is going out and vetting projects both in Nevada and in Colombia. He's really spending 50% of his time in the 2 different areas back and forth. And as a result of that, we're getting a real good feel for potential acquisitions in Colombia.
Ken, yes. So since we're seeing a tough junior market, and you are still optimistic about Miranda for 2013, can you tell us more about some of the plans and goals going in 2013?
Yeah, absolutely. I at the very top of the list. I believe that we just signed, I think it was on the 14th or the 16th of this month, so a week or 10 days ago, what I think is the ultimate deal for a prospect generator. We signed a strategic alliance with Agnico Eagle, a major mining company, obviously, to do prospect generation in Colombia. That's a 3-year deal. It's a 70-30 in terms of splitting costs, so Agnico will be footing 70% of the exploration costs, with Miranda pulling up the other 30%, and we'll have a budget of $1.1 million. So that's part of Colombia. We still have ongoing relationships with Red Eagle Mining in Colombia. They're looking at a robust budget at the Pavo Real project. And in Nevada, we've got partnerships still at Red Canyon, where we're expecting a significant drill program, and even more significant drill program, at least $750,000 at Angel Wing with our partner Ramilius, who is a producer in Australia. So right now, even though we're obviously trying to attract additional projects and additional partners, we can already see $3 million in partner spending for 2013.
Ken, let's just, before we conclude, let's talk about the importance of exploration in this market cycle. What's the value behind Miranda Gold right now?
Well, Miranda's, we try to do things right. We try to pick up exploration properties that have big potential, and of course, as we advance those with our partnerships, every year we learn a little bit more about them. Angel Wing is a good example. The partner there was drilling 10 and 14 gram intercepts with the last drill program in 2012. And so we're looking for a discovery. Bottom line is if Miranda makes a discovery, it has the potential of being large, and a large discovery certainly means value for our shareholders.
Well, Ken, thanks for being here with us today and for giving us an update on Miranda Gold.
Well, thank you, and once again, enjoy talking to you, and look forward to maybe meeting some of your readers when I'm down in St. Petersburg later in March.